There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time.
I know you rather see me die than to see me fly. I call all the shots, rip all the spots, rock all the rocks, and cop all the drops. I know you're thinking now when all the ball is stopped. Nigga never home, gotta call me on the yacht. 10 years from now, we'll still be on top. Yo, I thought I told you that we won't stop. Now what you gonna do when it's cool? I got money much longer than yours, and a team much stronger than yours. Violate me, this a BOJ. We don't play, mess around, be DOA. Be on your way, cause it ain't enough time here. Ain't enough lime here for you to shine here. Deal with many women, but treat down fair. And I'm bigger than the city lights down in Times Square. Yeah, yeah, yeah.
What's up, guys? We're here again today for a quick video for you guys on how to trade market corrections. So there are 3 simple steps I like to follow to keep my strategy very organized and keep my mind clear and really focusing on what's next. So step number 1, you're going to want to find setups, and to find the right setups and find stocks to trade, there's a free screener on finviz.com. I mainly look at the mega caps, but you could scan for whatever companies you want. I mainly look and trade at the mega caps. There's a way to show that. But first of all, I just want to show you guys here. This is the heat map. Great way to look and gauge the overall market performance. As you can see, the only thing really green is the utilities. So that's something to keep an eye on. To scan, you're going to want to go over the screener. And you have all these choices to pick from to filter out your stocks. I just mainly go to the mega caps to get a feel for the overall market and the strongest companies within the U.S. market. So I'll scan through these, view the charts and whatnot until I find one that I, offers a good trading roadmap ahead of it. And, it's easy to go over to Snapshot. This is great. They already draw up the map for you. So you just look at, companies that offer good opportunity. And I'm going to give you an example of the stocks that I've found and the stocks that I were trading. One of them, Bank of America. I was also trading Cisco. Here's one. That's 2 now. Chevron's another good one. Facebook was another one. Watching today for this double bottom. You could just literally sit here and screen through all these. And find the right setups for you. So next, you're going to want to go to the overall market. This is the best way to track the overall market. It is the SPY, an S&P 500 ETF. This tracks the overall market very well. You're always going to want to mark up your support and resistance areas. Areas where pullbacks can bounce and reverse. You want to mark them all down to get a feel for, the future and what the future could hold. Future levels where the market can head, future levels where the market may bounce. As you can see, we've broken through all of our major supports now, and we're on our way to the bottom from February and this April, or late March into April. These 2 lows here at the 257 level. So what you're going to want to do is you're always going to want to capture the overall trend of the market. As you can see, we've been trending down lately. That can confirm all the EMAs are holding on the downside. MACD's obviously on a clear downtrend. With that being said, after cross-analyzing the market, you're then going to want to trade your chart patterns. I myself, I do trade the SPY. I'll run through those quick trades I had with you guys. These are intraday trades. I day trade the SPY. I don't day trade the other stocks I will be going over. This was last week. We had clear support, clear resistance here on this Tuesday. The highs of the days were in this range, and that next session pulled back. That actually became a support level throughout the Wednesday session, and Thursday we were gapping down. So I was expecting that same level to hold as resistance as previous support acts as new resistance. So that was the game plan going into this. We pulled back a little, and then after the bulls rallied, that was the initial starting point where we initially got rejected. As you can tell, I wanted to short it due to the MACD being red, so I knew that shorting a uptrend or any sort of strength would be very beneficial if we couldn't close above it. And that started the pullback. That really got things going. The downside momentum really picked up. That was a 280 short. Lows of the day at around 275. So a 5-point pullback in the S&P 500 is very big. Not the S&P 500, the SPY. That was one trade where you literally could have been short the entire day as the downtrend persisted throughout the session and into the close. That was a great opportunity there. This was yesterday. Great trade. This is a classic gap fill. We had that gap down from the 275 range. We opened up at about 271. It was a pretty major gap down. We rallied the entire day, and into the close, you could see this entire gap filled up. That was a free trading range, and the high of the day was actually that low, or the close from that previous session. So that was a filled gap. That acts as resistance, and as you can see, that would have been a great place to go short. Momentum on the daily chart was still weak, still in a downtrend. You could have felt comfortable holding this overnight and into today's session, and that really would have proved to be a great trade as you look at another wave of sell-offs from the 275 down to the 265 range. So that was a big opportunity there for both intraday and swing trades. Now we'll head over to the top stocks that I was trading in the market. We'll go to Cisco. This was a great trade, great setup on the daily chart. I always look at the daily chart first, if not the daily chart, the weekly chart to get the overall time frame. 1, 2, congested here. Previous resistance acts as new support, and it flips when that happens in the cross. So I was expecting this consistent resistant line to be another level here where we could face rejection on the weak market. So we did come up and test it. I was short here, and I've been short for the past few days, and as you can tell, we're pulling back now. I felt very comfortable going short here because we did pull up into the slowest EMA, and the MACD was still in a downtrend. That clear resistance mark held perfectly. We failed to close above it, and Cisco just got brought down with the overall market. Great trade. Roughly 2.5 points on this in 2-3 days. So another one we're going to look at is JP Morgan. This had a very similar setup to Bank of America, PAC. Previous support acts as new resistance. Clear marked by the white line. You can see up here we penetrated, failed to close. That signaled a short. Downtrend on all of our indicators. You could feel comfortable shorting in a downtrend. And look at the pullback we're getting. 2 points off that area. On a clear daily chart, support line just failed and is now acting as resistance. We'll check out one more. We'll look at Facebook. This is a double bottom. This is actually just beginning. I haven't really been trading Facebook at all recently because of its its broken down chart. But as you can see, we might have another trade here with the close below this double bottom support line. So we'll see where that can go. This will definitely be one to monitor into the next coming days. But after today's session, a lot of companies put out some great earnings reports, and we were seeing some solid aftermarket volume come in on the upside. So we'll see how the market reacts to that, and if we can adjust and find some long setups for a quick bounce. But primarily, we're just looking short now. Always want to short into weakness and then plan for the future. And as of right now, the future says that there aren't very many long setups. A lot of stocks are trading under their key support levels, so there's a lot of room to drop until the next longer term support level. So that's something that we're going to keep our eye on and shift our focus on, definitely heading forward. But a key tip for this is you just always want to mark out your support and resistance lines and trade it like as is. You definitely want to get into the habit of being able to mark up these charts and have it just come as first natural thing. When you wake up, you see these, you should be able to mark them. That's just something that comes with experience. And the second you really get to nail that, you'll feel a lot more comfortable trading. As of right now, you can tell that today we closed below this key support line. There isn't much down until that level, like I said previously. So feel free to trade that. That's how I look at it. It's like almost an open range, and then adjust from there. So that's it for this video. I hope you guys enjoyed it. I hope it was helpful. yeah, enjoy the rest of the day.